right, everyone. This is a trader investor. Welcome to my channel. Another day of market analysis, weekly Tuesdays. Had a recording issue last week, so didn't get a chance to upload anything. Recording did not take place. Technical difficulties. So we'll just cover everything over the last 2 weeks. And in today's session, we just want to just have a conversation around what this consolidation really means, the time that we're in. Over the last couple of weeks, price has not really made some significant move. Right? It started down here at the end of October, and for about a whole month, we've been driving up. But now it's a sideways movement. But even during this whole month movement up, we've had a few days of consolidation, right? Earlier in November, we consolidated, and then since mid-November, it's been nothing but slow grind up. It feels more like of a consolidation than a grind up. We have this area here. We'll just use it as a area of interest. So we have this area here that price consolidated. It kind of broke out of that consolidation, but in a very, very narrow range. Why? We have this long-term supply zone that we drew on the daily chart. This is something that we have drawn on the daily chart, and usually I leave these alone until they're fully touched. So because they were not touched here in July, we kept them open. So when we go back to our hourly chart, that's why you see here when you have this full touch up here, some orders could be sitting up here to the downside. When you see after the fact, when you see that there hasn't been much movement to the downside, then you know those orders were very minimal, or maybe just retailers only had positions waiting to be filled up here. When it's really wild is when you know, when it touches and it really drives the price down, right? It touches, it went to the middle, it collapsed, it made a lower high, collapsed even further, it made a lower high, it just keeps touching it, taking up any remaining orders, and it collapsed and went back. So here we don't see that happening. Here what we see is it touches very, very small orders. We see a rejection here where price tried to pop, but it got rejected. A couple of weeks ago, I mentioned what I would really like to see is closing this gap and we take it to the upside. I think that would give us some momentum, but we don't have that. We don't have that momentum. What we have now is price consolidated here. It popped up at the edge of that supply zone. There's another supply zone up here that we need to worry about, right? So we need to be concerned of what will happen when price goes. If I take a position, I'm prepared to take an exit somewhere in this area, right? I say prepared because I have to see how it plays out. Maybe the gap up is outside to the other side, and I'm more comfortable to remain with a tighter stop. So everything plays out as it happens, right? You have to make a decision as it happens, but that decision doesn't have to be you sit in front of the computer all day long. Like, I really prescribe to that 12 minutes trading day decision making hour, right? Your homework is done the night before. You're not doing homework while you're at your day job, right? I'm assuming many of us have a 9 to 5, so you're not making a plan during that 9 to 5. You're making your plan the night before. So during 9 to 5, it's for 2 minutes at the bottom of every hour. You're just checking, hey, are things going the way I planned them to go? For example, on last week Monday, if price had given us a touchdown to this gap zone, right? At 6:30 Pacific time, we check. Oh, price is not there yet. 7:30 we check. At 7:30, if it's touched here, then we know. Oh, I better prepare and set some alerts, because I don't want to price to be all the way up here and then it's an hour later and I've missed that trade. So I just set alerts when I see something happening, and then based on that alert, we take action. So that's why during those 6.5 hours of trading, we just set 12 minutes to look at this. The homework is the day before. And now we have this consolidation that didn't really go anywhere. And then we have this next consolidation, which, forming a flag, a pennant here. And now it could pop either way. Just as an example, when we drew this here so the difference between these two is this is in a downtrend, right? We're making lower highs, lower lows. This is in an uptrend, higher highs, higher lows. So in the uptrend, the most likely scenario is it breaks the upside. But even if it breaks to the downside, we know what to do, right? We know what to do. And if we don't counter trade, that means it's an upward movement, it's a bullish market, and we just wait for that green to green to enter, right? Somewhere between the 38.2 and the 61.8 retracement, or we close some gaps, right? So within that green to green, maybe we close this gap. If some of you want to take a little sooner entry, you close this gap, you can take it. But that's what we're waiting for. If you're doing counter trade, then usually what I do is when this happens, if it breaks to the downside, and getting in a little bit into that counter trade, counter trend trade, it's a very tongue twister for me all the time, is when this breaks to the downside and I see a lower high. So let me draw it. If it breaks to the downside and I see a lower high, I target my green to green, right? Because my green to green is where I say price is most likely to reverse. So I don't want to be holding a position when half of me says, hey, this is a reversal area, and then the other half says, oh, but I have a position, I want you to keep going down. That doesn't work, right? You cannot contradict yourself. If you have the plan, and the plan is green to green is my sweet spot to enter, I also exit if I have a trade going the opposite direction. When I touch the 38.2, I want to see how I'm touching it. Am I slicing through or am I bouncing? If I'm bouncing, I'm really tightening my stop. I'm taking some positions off. That 1-to-1 ratio, 1-to-2 ratio, 1-to-3 ratio is not something that I will look at in that scenario, because I'm expecting that reversal. If it gives it to me, fantastic, right? The way it give it to me is it slices through. Like during the whole hour, it just keeps going down. No return, no rejection, no long wicks at the bottom, right? If there's any long wicks, it's only at the top. Just rejection, just keeps driving down. Then I'll ride it. Otherwise, if it stalls here, even if it stalls for 1 hour, I'm taking a lot of positions off, because this is my sweet spot for entry to the long side, right? Because this is a long position that we are holding. Even as we look at the monthly, we've already said in the monthly, we're in an uptrend. We're in an uptrend. We haven't even retraced to that 38.2, right? We're still in that uptrend here. Prior to that, we were in a downtrend, but now we have reversed that downtrend and we're in an uptrend. So that's the consolidation that we see. And that it's the same consolidation we see in the SPYs, right? Nothing has changed. It's the exact same setup, the exact same consolidation that is being played out across. IWM, we don't talk a lot about IWM, but IWM has not been a strong market, right? It hasn't been a strong set of stocks, right? This is a Russell 2000. These stocks are really in a consolidation. That's why I have this box here, this consolidation box. What I want to see is I want us to break out of this box and test it as support and drive up. Right? As we drive up, we have some supply zones that we have to look at, right? We have to consider those supply zones. What happens to those supply zones? We have to look at that picture. But IWM has not been strong. That's why I haven't been talking a lot about it. It's really been a range bound trade. I'm not much of a range bound trader. A lot of times because I don't have a good plan around it. When I try it, just for the sake of trying it, I am not successful, right? Either too early or too late, so I just don't trade range bounds. And one thing with this, it just reminds me to also mention it is very important to know your strengths and your weakness in trading. Like for me, range bound is not a strength, and even though I understand trading a lot, range bound is not where I want to spend time and energy trying to learn something new that has always failed me in the past, right? Trying to guess the top and bottom. Guessing top and bottoms is dangerous for me. So that's why I don't trade those. But now, if IWM gets out of this range, IWM is, because of the price, the option pricing is much cheaper, so you can get a lot more contracts. So I like IWM, but it has to move in the right direction. It has to give me a direction, right? It has to give me a direction. Like after COVID, it had a nice direction. Then it consolidated and then it collapsed with the rest of the market. Now it's consolidating again, right? And I would like you to take a look at the Wyckoff video that I did, the accumulation and distribution, and you'll be able to understand what is happening here, right? There's always a consolidation, but that's is that an accumulation or a distribution? Accumulation means institutions are accumulating positions. And the way they're doing it, because there's always this manipulation, is they make you think like, oh, they're taking price further down, right? Up here, when you say, oh, now it's time they're going to really take it down, but they don't. Up here again, they're going to really take it down, they don't. Right? When you see something like that, it's possible that they're accumulating. Distribution means they're getting rid of their positions here. Here is distribution. Again, the way they are manipulating is they get out of the distribution momentarily. I really encourage you to look at the Wyckoff accumulation distribution video. When you look at this box here, momentarily they got out here. This is where they give you a thrust to make you believe we're done with this. This was an accumulation, right? They make you believe this was an accumulation, not a distribution, but it's actually a distribution. When everybody's fooled with this one big bar here, the whole week they drove it up the whole week, and then the following week they say no, this is actually not an accumulation, it's a distribution. So let's be careful of those. Maybe we can do a lesson on that one of these days, and go over how to think about those trades and where to look for potential entries. So that's what I'm seeing here is a potential accumulation. Again, I say accumulation, but it could be a distribution. Accumulation happens where they will take the price up. So after an accumulation period, there could be a reaccumulation. And then at some point there's distribution. There could be a redistribution again. If there's a lot of discussions that the markets could end up going down, where the economy could be hurt, but timing, some say early 2024, some say late 2024. So as traders, we don't look at fundamentals, right? We look at what the chart says now. I take action on what it says now. It's for the now, for the next couple of days, right? I'm not taking a position for end of 2024. I'm taking a position for end of this week, at max end of next week, right, to capitalize on big moves with options. So that's why I haven't gone a lot into IWM lately, because we are in this accumulation distribution phase. Again, if you really tighten this box here, where it's really touching, usually they have an area where they will fake out like they did here. That's when you know, okay, now it's about time to get in for early entry, but the safest entry is up here. It's called crossing the river. When it crosses the river and it uses it as a support, that's the safest to enter. So we'll go into IWM when the time comes. For now, we just watch and see. So, but overall, as you look at the markets, it's just really a consolidation, right? Really a consolidation area, and from that consolidation, is this a distribution and accumulation? We have yet to see. So that's really what we're looking for. Now we're playing to the downside most likely, but let's keep in mind, let's erase this old setups from 2 weeks ago. Now what we really want to see is if it breaks to the downside, this is how we play it. And I stopped really intentionally at 38.2 because that could really be where it stops and it doesn't go any further, right? We just play it careful. Otherwise, if it breaks to the upside, we have this other supply zone. Let's see what it does with that supply zone. I think it's important to analyze what does it do with this supply zone and with this supply zone, what does it do? And from a fib perspective, the negative 272 is an exit, right? So it could be, let's see how I want to phrase this. If we had a nice green to green entry, I'll be comfortable targeting the negative 272, even with supplies up ahead, right? Of course, I'll watch them. I'm just not going to ignore them, but I'll be targeting here. But when there hasn't been any deep enough retracement and price just keeps going up, you can always go in the chart, pull up the last 20 years and prove me wrong at some point, yes. But for me, this is a plan. This is what I teach my followers. If you stick to a plan, your success rate is greater. Right? But the idea is take these lessons and make a plan that works for you. And stick to your plan. If you don't stick to your plan, then if you keep switching plans, which most people do, is every time they lose, they find a new plan. That doesn't work. You have to test it out and then be successful with it. So that's what we're doing now. So both spies and and Qs, spies and Qs, we're seeing what happens and where we exit, being careful. So with that, any trades?
No trades this week, Vinny. Just the market environment is just not there for any of our criteria. So it's just a lot of patience, a lot of monitoring, and just that. But no actual trades. I did set up the tracker, the scanner, but I didn't actually execute on any trades.
Okay, so let's look at a couple of this. Only 4 came up. Let's go to daily. No, not daily, hourly. So today, pre-market, remember, we have this gap up, right? Even though it's small, it's still a gap up. And when we have this gap up, what do we do? What do we do? We look at the previous day high or the pre-market high. We can even look at extended hours, and when we had this gap up here, when you, I don't like extended hours because I don't really trust them. the pre-market move. But if you add the extended hours, your hourly does not start when the market opens. It just starts. That bar starts at 6 a.m. instead of 6:30. So I changed it to 30 minutes. Right. So when you have the Monday evening gap up, you can either use the high of the previous day, or you can use the high of the pre-market to determine, right? Either way, the goal is, right, whichever way you choose. In this case, they're close enough, so it doesn't matter. Whichever way you choose is when you get that gap up, does price remain above that line? If it comes down, does it come down to test it like it did here? Like at 7:30, it came down but quickly rejected. So it maintained yesterday's high, right? It stayed above it. And so this entry here went from 585 to 644, right? It's a nice move, 60 cents move. That's pretty decent. I don't know if this is optionable, but if it is, then those options would be will give you very nice returns. If not, you can do even the stock outright, 10,000 shares or whatever, depending if somebody has a margin account, right, for day trading. But that goal is to in and out quickly. So same concept. So I'll take out this. Same concept. We had a gap up in the morning. Now here's where you have to be careful, right? So this gap up in the pre-market, even though I don't like it, I'm kind of forced to put that pre-market. So from this, just as a point of reference, right? Our close here. From this close, we had a significant gap up, right? During the pre-market, price rose up, we had a gap up. However, when price opened, it tried to push up and then it got rejected, right? So when you see this rejection here, during pre-market, I'm not very comfortable, right? It's rejection here. It's not a clean, I'm going up. I have a rejection at the bottom. I'm going up. It's not that. So there's rejection again, and then at an hour into the market, it drove up. So this is why you have to be very careful when you enter those trades. Those gap ups, nice. Yes, we have a gap up, but do we take this gap up just because we have a gap up? Right? But if we look at the pre-market for gap up trades, right, you see that, and then there's a rejection. I'm not so comfortable. If I do enter something, I must find, like here, body to body railroad tracks, right? Kind of, but you can say I can either take it here, or I can take it when I break this trend line. I can take a trade and have my stop right outside that trend line. So this was a nice move, right? For anybody who took this trade, this was a nice move, like 70, 80 cents move. But again, like I said, you have to really understand, why am I taking this trade, and do I jump in? That's why you analyze it, right? And I know I don't like to look at pre-market, but that's why you analyze it. Like if I take this, when I do trade this pre-market gap ups, I go definitely to extended hour view, because I want to see, is this tradable or not, right? So it looks like Bitcoin related companies had a nice gap up. Now this one from the previous day, pre-market was pretty much flat, and then an hour before market open is when you have this push up. So we have this gap up again here. I have this little rejection here, which concerns me. We have this gap up. So if I don't trade this, I wait. I didn't take this trades today, so I'm just looking at it hindsight. But if I get this rejection, I'm not so keen on taking a trade here. I want to wait. I want to wait. And really, what happened was the pre-market high on from got kept right high on the body. If you look at the wick, it's up here. So even that, you can say, well, it kept above it, right? It tried below once, but then it recovered. So if you take this trade up here, 1203 to 1237, not a very fancy trade here. But again, they had their move. And then I think there's one more. I don't know what this company does, but this company had the really nice push up yesterday after market. They must have come up with some news. I don't know what they do. I'm sure we can figure it out, but I don't want to waste time here. But when I see like one huge move up here, pre-market or post-market, followed by sideways movement, this flag here, let's just use this is the flag here. I need to see it break one way or another, but this is a big gap. So when you flip it just for checking, like this huge gap up, right? But overnight it stayed. When you look at the pre-market, that's why it's important, right? You can't just ignore the pre-market, because here it gaps up. Oh, fantastic! Let me take this trade. As long as I don't go below this area, I'm fine. But this trade went nowhere. So what you look at on the market, like when I'm playing this pre-market gap up, this is important view for me. Outside of that, I don't look at pre-market. If it's a gap up, it's a gap up. I just play the trade. But here, I can clearly see it was a nice push up, but then it didn't go anywhere. Right? So, at best, when you see this rejection and the next bar, it doesn't recover this flag, you can say I'm going to try to close this gap. What I'm going to do is I'm just going to set an alert here just for fun. I want to see if tomorrow we close this gap. That's why I just said this alert. This is just for fun. So this is how you trade. You don't need a lot of these, right? In the morning you come in, at 6 a.m. you come in and you look at these setups. Is there something that I like? Like this one, I like this one. I would have taken this trade because there was nothing that says, this one slight rejection, but that's at the high of the previous day. That's understandable. Then here, you take this trade. This is a pretty decent trade. Or even if you want to wait, like I said, to the 730 bar, then you take that trade. It's fine. The other two, I'm not very comfortable. If you look at Bitcoin today, Bitcoin actually, let's see. Yeah, I think this is where you see how Bitcoin just rallied from here to here. So at this pop, at 5:30, this pop is probably where all of them decided to have. I'm gonna gap up, right? At 5:30, somewhere around that, they had this bullish bar, and then it just went up. Anyway, that's what we're looking at. So remember to always consider those setups if you choose to, right? Otherwise, let's just stay focused on our SPY values.
Sounds good.
All right, let's wrap it up for today then, and we will talk soon.